Hey out there, and welcome to the Kevin Strong Show. And in this video, we're going to look at 15 housing markets where the year-over-year price is starting to decline, even though we're about to enter the hot spring selling season. We're going to look at some evictions and some foreclosures. Guess what? Seattle, Washington is on the naughty list on two big categories. But before we get to that, I want to share with you a video that I put out 30 days ago on January 21st or January 20th, talking about the stock market, because as I film this right now, the stock market is down over 700 points. And I was talking about something nasty was going to start to happen within 30 to 45 days from January 20th. So without further ado, we're going to go ahead and basically take a look at this thing here. And timing is everything, as they say. And that's in options, or just understanding stocks in general. You're going to have to come up with some type of supplemental way, but just sticking your money into an index fund or listening to what a financial planner has to say could be a death sentence for you and your significant other. So this is going to do it for the Kevin Strong Show. If you enjoyed this video, if you got value out of it, hit the thumbs up. If you have not subscribed to the channel, please consider doing so at this time. Have a great Sunday, because today is January 19th, 2025. We have the new administration coming forward. We might get a little bit of an exuberant pop from that, which I expect. But like I say, within the next 45 days, definitely by the second quarter, I think things will turn for the worse in the stock market. You guys take care and take care of each other. Always keep your credit score up and your debt down. This was the Kevin Strong Show, and I'll see you in the next one. That boy's bad. Come on now. That boy's bad. Who don't like chocolate? Short and sassy. But I do think, all jokes aside, I do think that the market can continue to sell off on Monday, because typically if we have a down day on Friday, that carries over until Monday, but it could stabilize. Do I think this is the beginning of that nasty correction? No, but this is one of those canary in the coal mine. So we'll probably restabilize probably around Tuesday, Wednesday of next week. Do I think we could still hit a blow off top? Absolutely. But that window of opportunity of the stocks continuing to go up is getting smaller, and smaller. So I wanted to share that with you because, as I said, that particular video was aired 30 days till today. So first, let's get to this article that talks about these 15 housing markets that are seeing some softening right when the housing market gets ready to take off in the spring. So this says 15 housing markets where prices are falling ahead of the spring selling season. So the first city that makes this list is Kansas City, Missouri, down 10%. These percentages are changed year over year. Austin, Texas, that was super hot. There was a lot of people from California that migrated from California specifically to Austin, Texas, started blowing up those home values. I think within the last 2 or 3 years, Austin's might have went up 30-40%. I'm just throwing that number off the top of my head. So if you've purchased a home in either the Dallas or specifically the Austin, Texas area within the last 36 months, you're getting smoked like a joint. You're getting smoked up. All right, Florida was also a hot market, right? A lot of people were migrating to Florida in lieu of what was happening during the healthcare crisis in March of 2020. That market also blew up a lot between 2020 and 2024. But recently, there's a year-over-year change of 8%. Columbus, Ohio, which is 2 hours south of Cleveland, Ohio, where I was born and raised. It's cold as hell there. Anyway, that's down 8%. San Francisco down 6.6. No surprise there. Grand Rapids, Michigan down 6.4. Nashville, Tennessee down 6.2. Tampa down 5.4%. I will leave a link to this particular list in the show notes. Denver, Colorado, which also was a very hot city, that's down 5%. Richmond, Virginia down 5%. Jackson down 5%. Phoenix also was a hot market. Very hot market. They have recently went down 4.2%. Dallas, Texas. There's another one in Texas. We just talked about Austin. Now we're talking about Dallas. That area down 3.6%. Orlando, Florida, another city in the state of Florida where a lot of people are migrating to, I'm sorry, that particular area is down 3.5%. And last but not least, yours truly's backyard, Seattle, Washington, down 3.2%, where the median list price is $725,000 and $725,000 for easy math. So why is that so important? The reason why that's so important, ladies and gentlemen, is that I'm going to show you some information about some top housing markets where evictions and foreclosures are starting to rise. And Seattle is also on that list. So now you have the perfect storm in a very, very negative way. You've got a softening housing market leading up to the spring selling season. And in concert with that, you have people who are hitting the top. They're hitting the apex of their affordability. So they're getting ready to get evicted and or they're losing their home through foreclosure. So we're going to go ahead and look at that article. I'm going to also link that particular article to this show notes to the show and let you guys take a look at that if I can find this thing here. So we're going to start off here with this map. As you can see here, this map clearly shows the percentage of residents who are likely to be evicted or foreclosed. Now, this is in 2024 because obviously we're only 2 months into 2025, so the data is lagging. It's not updated. But as you can see, just nationwide, everywhere, these percentages are all double digits. Washington's at 28%, California's at 30%, Florida's at 31%. This concentration area here where a lot of federal workers are in that Maryland, Virginia, DC area, really high. Look at that, 47, 41. This is really bad because not only is there a lot of evictions and foreclosures concentrated in this particular area, those folks, the housing market is getting hit the hardest there. So either those homes are going to have to be sold at a discount, which is going to reset the market, or some of those properties ultimately are going to be taken back by the bank and then have to be sold on the open market at a discount. Either way, you're going to see a significant pullback. I am not making a passive-aggressive statement to say that we're getting ready to see a housing crisis equal to 2008 and 2009. However, I am respectfully submitting to my audience that this housing market issue, cracks are starting to form in some of the major markets, and those cracks are getting wide and deeper. And whether or not they expand to a national footprint, it only remains to be seen. Here's 15 of the largest U.S. metropolitan areas ranked by the percentage of residents who are likely to be evicted or foreclosed upon in 2024. And at rank number 7, is Seattle, Tacoma, Bellevue area. This is why when I did that video, I think last week, say that the average mortgage payment in Seattle was $5,374. Don't ask me how I remember that. I am not the Black Rain Man. It's just certain things just stick in my mind. And I think the average rent payment was like $2,300, and I was saying that's like a $3,000 a month savings. If your rent times 12, $36,000. Do that over 36 months and you're well over $100,000 worth of saving. So you got Dallas on this list, Houston, Chicago, Phoenix, Detroit, Miami, Seattle, Atlanta, Washington, Los Angeles. So I'm not going to go through everyone verbatim because I'm going to link this to the show notes as well. What we're seeing is that some of these cities that are making this naughty list for evictions and foreclosures in 2024 also have a housing market that's softening up in terms of the price coming down and inventory going up. So this is going to be interesting. Sit back and get your popcorn ready because the devil is always in the details. Last but not least, the stock market has just been horrible this week. I have had a lot of losses, but through risk management, I don't think I lost more than $300 or $400 this whole week. The only thing that I'm actively in right now is CVS, the pharmacy company. I have a put. I'm shorting that. And I think as this market is still open right now, I think I'm up like 15 or 20% on that. One stock that I think should be on our watch list, just for paper trading now, I'm not giving anybody any financial advice, is United Healthcare. It's been beat down today and it's pushed its way back up significantly. So this could be a nice play, a nice rebound stock or swing trade for next week. We're going to talk about that and we're going to wrap up the show. So if I can find it here. There we go. So here's United Healthcare, and it dropped down to as low as like 440 today. And as you can see right now, the market is still open. This thing pushed up to 468. Typically, when you have a major stock like this that breaks a baseline right here, you see this baseline? Let's see if I can draw this here. See a baseline right there just drew? I had that drawn there, but right there, it broke that. That's kind of like a major support level. When basically once it broke roughly 495, it came all the way down to like 440 or 438. What's happening now is that buyers are coming in and pushing the stock up. Normally, when a major stock like this breaks a support level like this and pulls back down this much and starts to work its way back up, it'll normally fill the gap. The gap is this area right here in between. So for those folks who are visual folks, see this area here? That's a gap area. So it could fill up, which means that it may not hit resistance to around $500, somewhere around there. So from 468 to let's say 498 is a $30 change in price to the upswing. For those of you who do stocks, you know, that's a nice little pop. I haven't done the math, but you know, that might be a nice 5 or 6%. If you took out an out of the money option call on that, that would be a huge amount of money. However, because the market is so volatile, so choppy in the premium that they're probably asking for something like that, it may not be worth the risk. The other option play for those of you who are a little bit more advanced would be if this thing closes up strong, no pun intended, in the next hour, or probably by the time you view this video, you probably are better off taking out what's called a credit spread. A credit spread. Do a put spread. I would do my put spread at 450 to, I'd sell 450 and buy like 445 or something like that, and go out 10 or 15 days on my contract expiration and collect some premium. I think that's a relatively safe bet, but I probably would stay away from out of the money puts and calls at this point, unless you really, really know what you're doing, because you don't know how the market's going to open up on Monday. Although I do have a position that I've shorted out of the money on CVS, and I will show that to you real quick. If I can get this to act right, I don't think I'm going to be able to. So, all right, that's going to go ahead and do it. I'm going to go ahead and let that be, because this video got a little bit longer than two. So what a prediction from 30 days ago. Nailed it. Like I said, I think we are going to see a blow off top, but we're getting close to that window closing more and more and more in terms of how much higher the stock market can go. And I am doubling down on my prediction. By the second quarter of this year, it's going to get quite nasty. So it remains to be seen. If you enjoyed this video, hit the thumbs up. If you have not subscribed, please do so. I do appreciate all the support and your encouragement, as my channel is growing, and is growing at a much, much faster rate than I've ever would have imagined. So thank you once again. Today was February 21st, 2025. And as always, keep your credit score up and your debt down. This was the Kevin Strong Show. Take care, and I'll see you in the next one.